Is when to create a trust. Now, before we dive in, just a quick reminder. This video is for informational and entertainment purposes only, and should not be considered financial advice. Our full disclaimer is shown here and on our website. Hello everyone, and welcome to another episode of Finance with Anthony. So today we're going to be tackling a few unique financial situations right here on Reddit. So let's dive right into a few stories and see what the fuss is all about. So the first one we'll be looking at is titled Personal Revelation. How much interest cost us? Just want to share a personal revelation. This past year, I've had a massive change in how I pay attention to how crappy my family's personal finances have been. This was all triggered by laughing to Caleb Hammer at people for how dumb they are. But then I took a long look at our debts, credit cards, and our spending, got started on paying down cards, and have made a huge dent in what we owed. But the other day we got curious and I sat down and pulled all of the interest, all of our credit cards, loans, and everything else. Car loans, house, and student loans too. And even all the bank fees, overdrafts, we had in 2024. Once it all totaled up, it cost us just last year $25,000. I was shocked, but since we're hammering down all of our debts and even trying to get our car loans and house paid off ASAP and make that all go to zero with good planning, we're hoping to only have the house loan at the end of 2025 and then pay it off in 4 years instead of 26. That's $25K is killing me that I paid a rapacious bank that much just this year. Don't want to think about lost opportunity costs on that money or how much we did in the past 12 years of marriage too. Oof. So this is actually a very interesting take on interest. So interest on its own may seem something that's evil in nature. And what I mean by that is interest is something that we have to pay back usually on a loan once we take out like a personal loan, a car loan, a home loan, or even just like just buying stuff off a credit card. All of these are considered different types of loan instruments that we use on a daily basis. However, it's important to understand that not all interest is bad. And I know this may sound strange. And the reason for that is because there are certain types of interest that is actually deductible in nature. Now, some of the things that are not deductible are usually like student loan interest, personal loans, and all of these other aspects that we do on a day-to-day basis. However, if you have a business, you can actually deduct loans that are in relation to your business. You can also deduct interest, usually if you have a mortgage on a house, or if you have a commercial property, usually like a rental or a commercial building, all of the interest on that loan is also deductible. And on top of that, you also have a slew of other deductions such as like maintenance costs and other items, as long as it's either a rental or classified as business. So even though this individual paid $25,000 in interest, sometimes you have to think about, of those $25,000, not all of it might have been bad interest that you can't deduct. So it's important to understand what types of interest are good for deducting and which interest is, of course, not the best use of your money. So let's move on to the next one. Helpful money habits. I found small habits when it comes to money are the biggest difference makers. For me, it was simply checking my bank account every morning. I used to avoid looking at my balance, and because of that, I'd overspend without realizing it. But once I got into the habit of glancing at my transactions daily, I started noticing little things, subscriptions I forgot about, impulse purchases that added up, and opportunities to save more. I'm curious, what's one small money habit that made a big difference for you? Maybe it can help me getting in more habits to build off. So, one big thing that I usually like to do as a money habit is actually to check, let's say you have a credit card, check your statement for everything that you spent in the month. And the reason for that, it actually has two purposes. The first thing is to see, where did your money go? What are the typical types of expenses that you have on your card? That's the first thing. The second thing is, just to let you know, is sometimes fraudulent transactions. Yes, there are sometimes fraudulent transactions on your credit card because someone might have actually used your card for things. That has happened to me, of course, where there has been fraudulent cards on my card, and if I didn't check it, I would have just paid my credit card and essentially paid off the fraudulent charge too. That's important. That's also important to understand. Make sure that you're actually monitoring your transaction history of your credit cards. Another thing that I'll give you one more money habit that has actually helped me is, besides checking your account daily, for like the balances and the transactions, another thing that's important to understand is, hey, how is my credit doing? So, checking your credit score at least on a monthly basis will help you to understand how well you're trending overall and what are you able to do with your credit. Usually you're trying to aim for like the 740, of course, and above. That way you can actually optimize the amount of interest, the amount of loans you can get, and also overall just have a healthy credit history. I think these are the two types of things that I would recommend for anyone who's starting off their journey. Review your transactions, where you're spending, and of course, just make sure you're building up your credit score as efficiently as possible.
Hello everyone, my name is Anthony and I'm the host of TheLostSanctuary. I hope you've been enjoying our content so far, and if you have, please feel free to like and subscribe. Also, we have our website up here, and we also have some socials down here, and as always, leave your comments down below.
So let's move on to the next one. The next one is when to create a trust. I have one home that has a large amount of equity, several vehicles, modest retirement accounts, working on that, and a small business. At what point does forming a trust and putting all of my assets in it make sense? Have one minor child that everything would go to if I were to pass. Thank you. So this is actually a very interesting topic. So usually the reason you actually would form a trust is because you actually want to make the transfer of assets to your beneficiary much more seamless. Of course, in most cases, if you have it on your name, it's okay. However, it does make it more difficult when you have to transfer the titles and everything over to someone else. Usually the reason you have a trust is to make it very seamless. Essentially, you have the trust, you build it, you name all the assets, all the items that you have on hand. And then once you actually form that trust, you form a beneficiary when you pass, which you would also put in your will and other items like that. So essentially, once you have enough assets to think about forming a trust, usually a couple of millions of dollars Usually I would say the threshold is like $1 million. If you have $1 million of assets and, combined with like houses, cars, and other items, then yeah, a trust would make sense overall. That doesn't mean that if you have less than $1 million, you shouldn't form a trust. But in most cases, usually the rule of thumb is like $1 million or more is a great way to actually have a trust passed off. All right, so let's move on to the next question. Tax software for complicated cases. So I have a terrible tax situation. One may call it hellish. I have a couple of properties, one rental in 2 different states. I am also a student and have stocks here and there and work full time, and have pretty standard retirement accounts for a 9-to-5 employee. I don't make crazy money for my job, like very low 6 figures. Generally, this means I have a ton of deductions, and I found that TurboTax is terrible for multiple state filings, where you earn a certain amount of income in one state versus another. I have a lingering feeling that my taxes last year were wrong, as the amount I was taxed for in one state was much more than I made, but I didn't have the ability to change it. Regardless, for anyone with a more complicated, more than a W-2 at least, tax situation, do you have recommendations for tax softwares to use? So I would say when you have a complicated tax situation, the first thing I would say is probably don't fill out your own taxes. And I'll tell you the reason why. So I am actually an accountant by trade, and even I don't do my own taxes because of my own tax situation. Because I have a lot of different types of income, a lot of different types of deductions, and the tax rules change every year. And it's something that, you actually have to be very detailed and very fine, pick with a fine comb, very detailed on like the deductions, the limits. There's exception to the exceptions. There's so many different tax laws out there that it's always better in most cases to have a tax professional guiding you, depending on like your tax situation, especially in the tax situation that you just mentioned, where you have rentals, you have stocks, you have income, you have so many different variations of income that you might miss something or potentially over deduct. You might actually miss some deductions. So it's important, I would say, in your stage of life to actually have a tax professional look at everything you're doing. And sometimes even TurboTax or Intuit actually has live tax professionals that while you're actually filling out your things will actually be able to help you do it for you. So, you can actually choose to do it with, with TurboTax. You could do it with H&R Block. There's many different tax, personnel out there. And at one point, if you get big enough, you might even just want to hire your own CPA. Also, hiring a tax professional will, in the long run, save you a lot of money. And the reason for that is because not only will they maximize the amount of deductions that you can get, but usually they'll also maximize the amount of refund you can get. So overall, even if you're paying $500 to $1,000 for a tax professional, in the long run, you will be making a lot more bang for your buck. So usually the tax professionals will pay for themselves. And on top of that, you'll feel secure that things were done properly, especially if you picked a good professional. I've worked with H&R Block for myself for a couple of years, and usually they maximize the amount of refund that I got. And even though it does cost, as I mentioned, around $500 to fill out with them, I've sometimes seen refunds of $2,000 to $4,000 because they've maximized the amount of deductions and the amount of things that my multiple different income streams have. So make sure you get a tax professional to make sure that someone who dots your I's and crosses your T's. That's very important. So let's move on to the next question. Went from a corporate job with 401k to education job with pension and 403b. What do I do with my 401k? In 2018, I went from a corporate job with a 401k to a community college position with a pension and 403b. I had no idea what to do with my 401k and didn't have the bandwidth to deal with it. I had a major and difficult life event happen right at the same time. My 401k has been sitting in its account, but I have to pay fees on it because I no longer work for the company. I could really use some help figuring out what to do with this account. Additional info. I'm about 23 to 25 years away from my retirement. I have around 15k in the 401k. Our HR is currently in disarray and not a good choice for reaching out for advice. If this is the best option, I'll likely need to wait a while. They just have some major turnover and no one seems to know what's going on for even basic HR things right now. My understanding at the time, which may have been incorrect, was that I couldn't roll my 401k into a 403b, and just for some additional background, I have pretty severe ADHD and find all this incredibly overwhelming. I have no idea what my options are even for that 401k, let alone what makes the most sense. Any help will be really, really appreciated. So I would say, the first thing you should do, just to make things a little bit easier for yourself, is to not keep your 401k in the account that your employer originally had it in. And the reason for that is because it might not be the most optimal. So they might have like a lot of fees, and overall you can't really control where it's going. So what I would recommend to you right away is if you can, roll your 401k into another provider. The provider that most people commonly use, including myself, is called Fidelity. So Fidelity actually can take your 401k and roll it over into their account. And they actually have professional advisors, which will actually tell you, yep, this is the types of trusts, the types of accounts that you can invest in, and what are the implications of investing in each of these. And the resource is completely free. You don't have to pay for it. So essentially, this will probably help you to understand and help you gauge where do you actually want to put your money without having to be overwhelmed by the amount of options that are out there. So I would say, the only thing you would need to actually roll over the account is a statement from your old 401k. You send that over to them, and they'll take care of the entire process for you. So that's what my recommendation would be, especially considering you don't want to make it too complicated for yourself, and always have someone out there who can actually look out for you without having to charge you these crazy advisory fees, of course. Alrighty, so this will be Finance with Anthony, episode 9. I hope everyone out there has a blessed day, and adios. Keep doing what you're doing. You're doing an amazing job, and I'm wishing everyone out there all the best. Alright, until next time. Adios.